Welcome back. This is Chili Davis, and I'm back to do another video. I want to welcome back all my subscribers and welcome to my new viewers. This is a channel where we talk about my top stocks. I want to welcome two new subscribers, Wilson Koo and Vanessa. Thank you for subscribing to the channel. Now I'm going to get into my topic today is what is earnings call and why you need to be concerned about it. It says on Investopedia, an earnings call is a conference call between management of the company, a public company, and analysts and investors. So basically, if you're a big investor, you own, thousands of shares of a company, oftentimes you're invited to the investors call. But most of the time is spent between the CEO talking about reports and talking about how much revenue, how much profit was made for the quarter. And then the analysts on the second half of the call discuss different projections and guidance moving forward and, analyzing certain products or services the company said on the previous quarter that would bring in so much money. They're kind of like accountability check. So that's what the earnings call is. Takeaway says earnings call, conference call between public company management and interested parties to discuss earnings for a specific period. That specific period is for 3 months. Now, why do you care about earnings call? Okay. We have gotten spoiled over the last 2 years. Stocks were going through the roof because the federal government was pumping money into the economy. The people who had money already, they just took it and bought stocks. Whether we had GameStop, we had AMC, we had Novax, we had Moderna. All these companies just went straight through the roof. And basically they went straight through the roof based off of speculation, no real earnings, just excitement. So Trump had the stock market rocking the last 2 years, 2020 and 2021 and 2019. There was a little overflow into Biden's administration, but essentially the stock market is based off of earnings. A stock's value is based off of what it's producing or what it's not producing, okay? There is some sentiment that will raise the stock, but that emotional sentiment does not last long, okay? So the company discusses important aspects of the 10Q report, the annual 10Q report for management discussion between the analysts, and analysts use the information for the earnings call and fundamental analysis of the company. So that's about earnings per share. So they always do this earnings per share, how much this company is actually making per share versus how much debt it has on its book. So like a company like Microsoft has no debt. It has a lot of revenue. Those type of things. It has low liabilities. Everything they own, a company like Microsoft, they own everything. They have low debt. If they do have a loan out, it's a small loan. And they have billions of dollars in cash in the bank. Okay. So that's what most of the time people want to see. If you got a new company like a ChargePoint or something like that, they don't have money in the bank. They may have revenue and profit, but they don't have money in the bank. Okay. Everything is a little bit different, but this is what the earnings call does. It's a chance for the public to talk to the company and basically keep accountability. Okay, so right now we're in a stock market where earnings matters most. Okay, so a lot of people are wondering, why is my stock not going up? It takes 3 months at least. Okay, so let me show you what the earnings call looks like. You can go to Bank of America Investors.com. And under it, you'll see a presentation that will say fourth quarter 2021 earnings presentation. You can listen to the earnings call, or you can take a look at the actually PowerPoint slide and see how much money they made for the quarter in deep detail. Now, you may not care about exactly how much money they made, but the most investors should if you're a long-term investor. Okay, so Bank of America just had an earnings call back in January, and the next one is in April. Okay, so every 3 to 4 months, companies that are publicly traded on the stock market must report. Okay, so let me show you what it looks like. I did a little quick graph what it really looks like. And so Bank of America reported on January 19, 2022. And then they will report again on April 18th. Now, Your stock went up right here on January 19th when the stock reported. And then it probably will go up again on April 18th. Well, what happens between the initial earnings call here and happens here are two different stories, okay? The Bank of America may provide good guidance between January 19th and April 18th of 2022. But the problem is, yes, we knew about interest rates. Yes, we sort of knew about inflation. We didn't know about gas prices, okay? So that is a big problem in earnings call. They knew in January only about interest rates being about to be raised. They did not know about the war in Ukraine happening, what effect that was going to have on the consumer. In fact, they thought the consumer was in great shape, and they didn't know the job numbers were either, they at least thought they would positively grow, okay? So this is what affects the actual stock. All the events either pull down the stock during the quarter, or it just goes down because there's just not enough positive catalyst to bring the stock up, okay? So this is like the trend line. The stock after earnings, it goes up and then it sells off. If there's no good news, or if the stock market is having different conditions like higher interest rates, inflations, high gas price, all that, the stock is going to sag. And that's what we had, okay? And then on April 18th, based on all the events that happened and all the events that should have happened based on what they thought in January, all that gets added and accumulated, and the CEO, CFO say, hey, we did a great job considering XYZ, and we don't expect any headwinds from April to August to the next earnings call. Or there's sometimes they'll give the whole year outlook, right? So that's pretty much what happens. So we're in a stock market where now it counts. You have to know the numbers. You have to know how much earning per share, how much revenue they're doing, if they're profitable. In 2021 and 2019, they didn't care if the companies were profitable, okay? But now in 2022, there's accountability check with all stocks. And that started right about in November, December. We saw a lot of high growth, forward-looking companies like a Twilio get slammed and price dropped by over 30%, okay? So we're in a different stock market in 2022 and headed forward for now. And I just had a second example, SOFI, same way. SOFI reported on March 1st, stock shot up to about $12, $13 per share. And here we are midway through March, the stock is back down around $9 or $10 per share, okay? So like I said, there's not gonna be, as we know that SOFI's earnings report was good. We know all the positive things, they got the bank chart, etc. But we have a couple of headwinds. We have inflation rates, we have high gas prices. They did have a growing new customer base. So all those signs are good, but the stock cannot pop until all that information is calculated for the next 3 months, okay? So they'll have an earnings call probably somewhere June or July-ish timeframe, and that's when the stock, I believe, will take off again, okay? But until then, there's going to be a few notes, a few catalysts in the news that might take the stock and have it pop for a day or two, but it'll probably come back down. But right now, we're just in an earnings call type stock market. So that's what's going on. I just wanted to share that with you. And if you ever want to know, for example, SOFI earnings call, it shows here they just beat Q4. That was March 1st. And for example, if you wanted to know Bank of America, you can come over to this column and they already have announced when Q1 earnings call is, okay? So it's every 3 to 4 months, the companies will report and tell you exactly how much revenue they made for the quarter, which is every 3 months, okay? So that's what I wanted to talk about. This video was just earnings call is so important to 2022. We are no longer in 2021 or 2020. It's a totally different stock market. You need to count the quarterly earnings call. That's every 3 months. Otherwise, you'll be lost. You'll be like, why my stock is not going up? It takes about 3 or 4 months for all the new information, all the revenue, all that to get calculated in, and plus the current context of the market. That's why I give you all these different tools using, just Google by itself. And also, as I've talked about on dozens of videos, you want to use tip ranks. Tip ranks gives you exactly where the estimates are going. So if you want to know what the Wall Street analysts are saying, for example, if you just want to know Bank of America, let's see here. Okay. So this is Datadog here, but if you want to know Bank of America, all you have to do is type BAC, scroll down to Bank of America stock, and you can see this forecast, okay? Bank of America, based off 18 Wall Street analysts next 12 months, price target is $66, okay? The average price target is $51 in the next 12 months. And as you can see, the analysts, Wall Street analysts, have 11 buy, 6 hold, and 1 sell, okay? And this is for Bank of America stock. Now, you could do this for any stock, so if you wanted to do it for SOFI as well, you just search SOFI. And the same as well with SOFI. SOFI has a price target of $17, average price target in the next 12 months by 12 Wall Street analysts. There's 7 buy and there's a 5 hold on the stock, okay? So that's good signs. That's how you do earnings call. And if you want more information about the stock and stuff, you can pay for the premium. If you just want more information, like actually earnings per share, so you can go to CNN, and it's CNN forecasts. So far, okay. Price. I'll leave the link below. So if you just want to do it for your own peace of mind and you want to get free information, understand what you get on CNN Money, you get it for free. On Tip Ranks, it's not for free, right? All right, but if you want it for free, the earnings per share and different numbers like that, you can do that here on CNN Money as well. Okay, so this was the sales for the last quarter. And then you can see earnings per share here on CNN. You have to pay for that on Tip Ranks, okay? So there's 2 tools away to see the price target. As you can see, they actually have the same, almost the same price target here on CNN. They have $22 per share and $17.50 versus on Tip Ranks. Tip Ranks is $17.65 and $22 on the high end. So you're getting the same information on CNN Money, except you don't have to pay for earnings per share and the revenue for the current quarter. Okay, so this was a quick video on earnings call, why it is important and why you have to have it. I know it's not a sexy topic to talk about, but this is the current market we're in. You're no longer going to get a 50% jump in a stock in 2 months. It's going to take at least 3 to 4 months for that information to circulate through the company and give the analysts in Wall Street a chance to calculate the intrinsic value of the stock. So I want to thank you for watching. Thank you for listening. Please like, share. And if you'd like to get some free stock, please use my Robinhood link, and we'll see you on the next video. Good night.